Hello and welcome to Exchange Traded People. I'm your host, Michael O'Riordan, and today's guest is Frank Holmes, CEO and Chief Investment Officer at US Global Investors. Frank, welcome to the show.
It's great to be with you, Michael.
Super. So, Frank, I like to kind of divide these chats into two parts. The first part is to talk about you and your story, and then the second part is more kind of industry focused and to hear what you think about what's going on in the market right now. So, to dive straight into the deep end, my first question for you is: when you were a kid, what did you want to be when you grew up?
When I was a kid, I wanted to grow up to become a doctor.
Doctor, okay.
And I went into that journey going to medical school, and I did a pivot move, like a open match on the field, and fake left and go right. And I realized I was much more destined to be an entrepreneur in economics and business, and I switched. But I really learned so much from the sciences of biology and chemistry and physics that let me go into the money management business.
Got it. And why a doctor? Was it like there was a doctor in your family or anything?
Yes, my mother was a emergency nurse. They didn't have money to go to medical school. She was going to McGill. I'm a Texan. You'll tell by my accent. I say y'all come back, eh? I've been living in half my life in Texas, but originally born in Canada, and grew up in the eastern part of Canada where it was Irish and Scotch.
Right.
And so my grandmother was Irish, landed in Newfoundland, and my grandfather was Scot, who landed in Nova Scotia.
Right.
And so that sort of journey, and everyone fought in World War II, so I would learn all this history and hear about it. But at the same time, they were very much caught up with the community and how you help the community and go into medicine. And so several of my aunts were nurses, and I was going on to become a doctor. But that changed.
You clearly did, yeah. You took a different path in life, right?
Well, you never know. I try to tell people we all have a unique journey, and you learn, as Steve Jobs says, you can look back and connect the dots, and it makes it much more helpful predicting the future of where you're going. You can understand the past, and I'm a big believer you can learn from one industry to the next, and that's led me into creating ETFs. And really, I learned so much from going from A to B that took me back to C. And I love reading about history, especially the British history. That was my favorite class in grade 9. I can remember vividly. We don't get that type of education in Texas. Of understanding, the European evolution and where it grew. And my guardian father was an Anglican priest. So that gives you a complete different scope that all of a sudden you have to know about C.S. Lewis and his significance, not besides Narnia, but of holding the British people together while the bombs are being dropped, a spiritual element. And so that background you don't realize shows up later in life. That I went to a high school in Toronto, which was 30% Chinese in the 70s.
Really?
So that allowed me, when I moved to Texas, to set up the first China fund, because I grew up in Ni Hao Ma in grade 9. I had friends. So you just, as you go through this path, you can pick up information, and it keeps enriching itself and paying dividends.
Yeah. So you mentioned the fact that you had aspirations to be a doctor originally, and then you kind of realized that you're more of an entrepreneur. So you've been in the industry for a long time. Like, how did your first step into financial services begin, and then the journey into US Global, because you've been there a long time. So how did all that come about?
Well, when I went in, I switched over to natural sciences and psychology courses with economics. It was interesting because I was an entrepreneur, and with my best friend we were busing people to sporting events and rock concerts. And my first concert ever was Elvis Presley. So wow. I would go get tickets, get 200 tickets, rent 4 buses, and do a markup, and basically sell you that seat that drove you to Buffalo to see Elvis Presley. And I moved 200 people, and I would make $25 a person for putting that package together. and that paid for my university. So I was that entrepreneur, and it started me buying real estate in university. So I bought my own house, and then I rented another one. So it was just always this. That's my entrepreneurial world. So when I went into the structured world, I'm going into what they call Wall Street of Canada, which is Bay Street. It was to be an investment analyst, because I thought, well, I've got intuition, and I'll make money easy if I can understand the research process. Little did I realize that it's 12 hours a day. I fell in love with the long work hours, because you're always learning about so many new industries and catalysts. And what did I learn about catalysts? Well, that came from chemistry class. So either you're releasing energy or you're absorbing energy, exothermic or endothermic reactions. Well, that's what a gold discovery does. That's what a great CEO does. They are a catalyst. So therefore, you try to look at companies for, is it a person, or is it an invention or a discovery that's going to be a catalyst for the creation of unlocking wealth? So the sciences I had all of a sudden took me to being an analyst. And my first job was basically a quant analyst, which was looking at the 5-year government bond and stocks that had a dividend yield that were higher than the 5-year government yield. And those companies outperformed the overall market and qualified for pension funds. So that idea of having rules-based dynamic processes started when I was 23 years old.
Wow. And how did U.S. global investors start?
Well, I built a reputation. I read this book called Think and Grow Rich by Napoleon Hill.
Yep.
And I was told you have to read it from a philosophical point of view. Don't think that you're just going to go and get this and get rich. A lot of it was interviewing other highly successful people in every industry. Even archbishops he interviewed to find out, how did you go from being a local community priest to becoming the archbishop? And was there a similar pattern to you being the CEO of a steel company? And he found similar patterns. So I found that really interesting. And there was a chapter in the book that talked about, one was about God and spirituality. So I thought that was really interesting. But the other one was building your reputation, become known for something, become an expert. Spend an extra hour a day digging down and understanding it. So I picked gold, and I picked gold stocks. So I became this sort of alleged expert in the world of gold. But when I look back at it, during that process, so busy, I didn't realize that I launched the first gold royalty company in the world. It was my first IPO, not realizing what it would become today, the multi-billion-dollar biggest gold royalty company in the world. And so you don't realize when you're caught up with it. But then I learned about gold because I had a professor that was from the London School of Economics that talked about macro history of economics, and it was fascinating about gold as an asset class. And then I had to learn about gold exploration and developing gold mines, and they all seemed to come together. And that led me into coming to the U.S. Because I saw taxes went to 65% in Canada. I love cold weather only to ski in. I do not like cloudy, dreary winters, long winters. And I like the heat and the sun, and the tax rates were much less. So there was a gold complex that got into problems, and I had done very well. God had blessed me. I'd done exceptionally well in Canada, going from being a research analyst to building a trading desk and building a banking division for a small boutique brokerage firm that now has become Canaccord, which is listed they're also in Canada, but in the US and in London. That journey led me down to say, let me go from what they call the sell side, where you're selling a product and research or trading desk facilitations, to a buy side where you're buying the ideas. And I would go back to my research roots of being a chief investment officer and bring that. And so we end up becoming recognized as the best gold fund managers in the world. I received the Mining Man of the Year award from the Mining Journal in London, Top Guns, etc. So you don't realize that you're busy learning something back in the early 80s that would all of a sudden take you where you are in 2006 and 7, that this culmination rewards itself. But the big part was the quant learning of being dynamic rules-based systems for picking stocks or sectors and thematics. That led to where I had to get into ETFs.
Got it. So when you kind of look back at your career now, what are the kind of like the learnings that spring to mind, and what advice would you give your younger self now starting off again?
Well, yeah, I worry at times for young kids today about this resiliency that they have. Your grandparents, my grandparents, they had wars. They had World War I and II, and they had a depression. And it was tremendous external forces that they all solved, and they developed that resiliency factor. And I think when you go into business, there are so many external forces that hit you that are unexpected. Government policies are a precursor to change. I put in all my prospectuses. So I monitor and track the monetary policies and fiscal policies of the 20 biggest countries in the world. Because they can change, just like we had Trump with the Trump war on tariffs, etc. It changes capital markets, and you have to have a resiliency to be able to adapt from them. And you have to learn about one of my mentors said the great story of Joseph and the Pharaoh, of beautiful dreams for 7 years and then horrific dreams for 7 years. What do they mean? Well, in the 7 years of building wealth, save for the 7 years of famine. And in business, you have the same way. You have to be always saving and investing some of your money, because you don't know what external force is going to come upon us that you have to be able to respond to quickly. And it can be physically, it could be mentally, emotionally. There's always disappointments and setbacks, and how do you have the fortitude to push through it? That's the biggest thing that I look back at, that, where did I get it from? I think it's the faith. I think it's a bigger force that's out there that I rely on in those moments of being alone and saying, I will find a solution to a problem. I will zap that gap. And friends do I have that have the expertise that could help me zapping that gap? I think that's what you sort of learn through it.
No, I definitely resonate with that one. So moving on to kind of like the industry and your views on market. So your firm has been an early adopter of thematic ETFs. What drove you into the ETF space, and how has your view on active versus passive strategies evolved since you started?
Well, first of all, I was in the world of gold. And what I learned is that Chinese people love gold for gift giving. I learned this in high school. So it gets stuck way in the back of my brain. And all of a sudden I'm learning more about gold and the drivers and the macro. And so I went over to China in 91 and saw, wow, something's happening here. It was still very Maoist looking at the airports, etc. Nothing like today, but there was this vibrancy that was happening in Southeast Asia, and there was this cultural affinity towards gold. So I said that something big is happening. So I launched the first China region fund, and that's because of my high school experiences, and all of a sudden going over there, that tacit knowledge. I'm a big believer, Michael, that it's explicit knowledge is the quant experience or the math and physics of capital markets, but there's the tacit knowledge of meeting the people, of embracing the culture, the food. Maybe you don't like the food, but you have to go and taste it and feel, okay, what is the history of their culture? Because everyone's proud of their culture, and maybe so foreign to me, but I have to try to embrace it. So is there opportunity? So I launched the China Fund. Well, that really helped me in the gold space. And then I said, well, I knew that in my high school in Jarvis was 30% Asian, but guess what? My friends were all Ukrainians and Poles and Czech and Yugoslavians and Croatians and Serbians. And so I knew about that history from school. And then we're going to have the EU is going to all of a sudden create a currency, and it's a Canadian Munger who wins a Nobel laureate for it, basically creating this sort of unit currency, and the EU is going to become part. So I launched the first Eastern European fund. Well, that went from 4 million to 12 million. Russia defaults on its debt. It goes back to 4 million in assets. I had the only Eastern European fund. Why did I have it? Because I knew how educated and how hardworking Eastern Europeans were, and that they would grow more rapidly their economies than Germany and Austria would. And that was my big bet. And same thing with Yugoslavia. So I persevered through it. And we went through this financial crisis, long-term capital, and then the stock market crash. But those cycles last, Michael, 4 years. A credit crisis is a 4-year cycle. So everything gets cleansed out and away we go. So 2001, my Eastern European fund grows to 1.4 billion.
Wow.
And it is the player, and it's 50% in Russia. And I took the whole board over to Russia to see what was the difference. I was there in 93, 94, in St. Petersburg and Moscow. Been involved with gold mining over there and recognized the cultural issues that they have, but they were trying to embrace North American capitalism. And so it worked. So you don't realize, but I share with you, my heart goes to my friends in high school I played sports with that were Ukrainian and Polish, and I learned that the Ukrainian mother, I had to say, Dobry den. And I say, Dobry den, she says, oh, you're too skinny, here's another cookie. And my Polish friend and his mother was, so you had to say Dzień dobry, but good is dobre. So you had to learn, and if they're Yugoslavian, Serbian, you dobra takakasi, but dobre was always in there, good, good, good. I learned this at the age of 12 years old, about embracing other people from other places. Who would ever think that 30 years later I'd be launching products around those themes, a country theme, a macro force being created to make the EU a significant economic power horse. So I've always tried to play that macro theme. And after we had the 08-09 crisis, we saw that all the airlines in America had gone through, except for Southwest, a bankruptcy of some form, but they were all flying. And I had noticed that all my global flights had dropped by 30%, options where to go and when, but the prices had gone up 30%. And all these airlines are in some form of bankruptcy. And so I scratched my head, and I had a board member said, you have to get in the ETF business. So I said, okay, well, let's go with the quant approach, dynamic rules based. Let's go smart beta 2.0, the creation of that concept that the portfolio construction is just important the factors for picking a stock. And there was no airline global ETF around. So it's the only guy on the shelf. And in that journey of finding out that these mergers were all of a sudden unlocking all this new economic power that the airlines were having, it was launching of jets. And then I went to try to launch a Bitcoin ETF in 2017. I launched jets 2015. In 2017, went to launch Bitcoin. I realized they weren't going to let that happen only last year, that they had to make that a viable product. But I went and launched the first crypto mining company in the world called Hive, and it only uses green energy, and it's first in Iceland, then Sweden, and it's in Canada and Paraguay. And so we hydro. It became my ETF type of product before crypto went crazy like it has in the past year. So I've been early at seeing something, and I learned about Bitcoin because of my experience in gold. Gold is an alternative asset, and gold is decentralized, but one is tangible, and like airline mileage points, they're intangible, and you have to use them to make them tangible. That's the same thing with Bitcoin. So I could see those nuances and said, okay, if you're mining the coin, you don't have a KYC AML problem because you have the virgin coin, and we start putting them on our balance sheet. That was launching the idea of Hive. So then in that journey, I learned all about data centers, and that turns around. I realized that Hive is moving all this equipment from Asia, and it's coming by cargo. And I realized that cargo ships carry 80% of all commodities in the world, but they also carry finished products. So if you want a Samsung refrigerator, well, that's going to be moved by ship. And so I realized that you mean I can follow shipping and have my hands on the umbilical cord between emerging and emerged economies by the day pricing. And so I launched the C ETF. because I was seeing the rates after COVID go through the roof. And what it was,
Yeah.
so you don't realize you're in a research meeting and you get this aha moment and you connect the dots.
Yeah. No, I can definitely see that. Going back to the Jets product, so the Jets product became a bit of a cult product during the pandemic, like a cult hit. What did you learn from that success in terms of investor behavior?
Well, it was very much a sophisticated retail person that were using social media to describe it. So all in March of 2020, it fell to its all-time low, like $11 and change. And April the 15th, the total number of TSA people being cleared by Homeland Security hit 85,000, down from 2 million a day. So that was sort of the bottom, and everyone on Wall Street was negative on the airlines. They're all going to go bankrupt. And I started reading that on historical cycles, whenever there's a global phenomena, that the airlines fall 70 to 85%, and a year later, they're up 120 to 60%. So I went out and I started doing the research too. I had to get it validated. And there was a SARS phenomena. There was 9/11. There was SARS. A global scare. Everything falls. People stop flying. And then all of a sudden it makes this huge comeback. So I said, this is interesting. And there's this chatter a lot by these young analysts on YouTube and on Reddit and Twitter that were talking about. A guy said, you got to know Sam Chu. And I said, Sam Chu who? And he said, Sam Chu has 2 million followers. And these kids know every flight and every airplane and where the best seats are and where the seasonal pattern of the year to buy a ticket. I said, really? Yeah. And he's flying first class. He's flying here. He's telling everybody about this plane and that plane. And he's making 2 million a year on his YouTube followers. I said, I did not know about the revenue sharing that was on YouTube. And then you had all these other young analysts that were coming out and doing ratio analysis and looking at the revenue per seat mile, and that when that revenue per seat mile turns positive, then the bottom is behind us in the airlines. Wall Street was still negative. In June of 2020, Warren Buffett blows out all of his Delta Airlines. He's given up, and rightfully so. He's 90 years old in August of that year. And so I can understand what his concern is, but that was not the concern for the 25-year-old kid that's writing as a journalist, flying back and forth now, able to between London and Barcelona. And so in that journey, I learned about, in particular, was Reddit had all these pages on digital nomads.
Yeah.
What are digital nomads? Oh, at the beginning, it was like 35 million of them. 35 million. Oh, yes. They predominantly fly north-south. They go from South Korea and Japan. They go to Malaysia and Thailand and Singapore and Indonesia. And then they fly back. And all of a sudden, they're occupying all that flights 4 times a year going north-south. That multiplying effect, there's not enough airplane seats. And they quickly start to absorb the seats, because every kid in the US wants to go to Argentina and they can learn a language, and the cost of food down there was 1/4 of the price. Then I find out on Reddit that there's all these places where you figure out how, if you're American, you can make $120,000 a year tax-free. You still have to file your taxes here, but you can turn around and do your coding or your journalism from another country. And everyone became concerned on the digital upload. So Spain became so important because Spain's digital fiber optics was far superior to Italy or Greece. So the north-south traffic from Germany and Sweden and Finland and Norway wasn't going to Greece, it was going to Spain and then Portugal. So all of a sudden, my AI digital Bitcoin mining business, the data center business, I could relate to understanding the loads factors that are in Spain. So that's where it all comes from. There's all these connections and trying to make.
Joining the dots. Yeah.
I hope I'm not rambling too much for you.
No, not at all. Not at all. This is fascinating. You launched a product with in Europe with Han ETF a couple of years ago. What inspired the decision to enter Europe, and now that you've had that experience, like how do you perceive the European market versus the US market?
If you look at this in demographics, there's many more on television. This is a classic. On television, there'll be many more soccer games in Europe than there's going to be in America. There's going to be more business stations in America. On Sirius Radio, there's 4 business-only talk radio. That's not in Europe. In England, it's gardening and cooking. This is the pastime. There's many shows on for kids cooking, baking, etc. It's a pastime. America is about innovation, creation. Everyone dreams that they're going to start a new business from their garage. And the story that adopted kids, like Steve Jobs was adopted. Look at what he created. Jeff Bezos was adopted by a Cuban family. That's where he gets his name. Look what he created. Larry Ellison, Oracle, he was adopted. It's a land of opportunity. Anyone can do anything if they have. So you have a younger population that is more caught up with investing and speculating and investing in America than I would say that's in Europe, those demographics. If you look at how the percentages in France, how many people, the stock market, how long is it really open for? It used to be when I first went over to Europe, it was 4 hours a day. When Disney opened up in Europe, they threw tomatoes at him because he was a capitalist pig. The CEO Eisner. There's videos on this on YouTube. It's a complete different than in America. He's a hero, Mickey Mouse. If you create a theme park in a city in America, you're a hero because you created jobs and you created tourism. You create, not so in Europe. So you see the psychology and the culture is different. So the investors there are different. What really blew me away in this learning curve was crypto was much bigger at speculating on new crypto ideas, NFTs, than ETFs or stocks. So the Paris Bitcoin Week gets 9,000 people. You can't get 9,000 people for a conference on ETFs in Paris. And when it was the crypto conference, it was at the Louvre. It just blew me away that you would have. I understand in America, they get 35,000 for a Bitcoin conference. You can't get more than the biggest money show for ETFs and mutual funds is in Orlando for retail is something like 6,000 or 7,000 people. And it's free. The Bitcoin people, they pay $1,000 a ticket. So it's interesting for me to see that we are going to get a whole young generation of youth that are now in their 20s and 30s in Europe that are going to be much more keen on looking at ETFs in the future and speculating than what we had 30 years ago today, because they have seen what can happen with having the right NFT or being long a portion of Bitcoin, etc. That and like Barcelona is incredible. Like there's no investment conference that gets out 6,000-7,000 people.
Yeah, true.
But the crypto ideas for investing in packs the room. So they're that audience of generations X, Y, and Z, and they're going to come over to the ETF and Bitcoin. That world's going to do a fusion. They call it the crossover in music, where if you're a rock and roll and all of a sudden R&B likes your music and country and western loves your song, your audience of sales go up dramatically. Does that music have a crossover? And I see that happening, and I see in America where baby boomers my age are all of a sudden now with regulations embracing Bitcoin and the ETF, that we're still seeing a huge generation of young 20% of all price discovery in America is retail. The retail component is, with gamification coming with Robinhood, is a game changer. There's where you open an account and there's no commissions to be charged, but you push a button A, B, or C, and you get one share of a $3 stock. It's gamification. You don't know what the roulette wheel is going to have, but basically, gamification has entered the capital markets, and now you say, well, how big is Robinhood? Robinhood's over 50 billion. Robinhood went into Canada, and they're going to go into ETFs and mutual funds, but first they bought a crypto because 20% of their profits come from young people. What's the average account size of Robinhood? Oh, it's $10,000. What's it at Schwab? It's $100,000. But where's all the price discovery coming? Robinhood. And so I think we're going to be through a wave that's really interesting in Europe, that the ETF space, and we're seeing this out of the fear button with Hans NATO ETF. Every time there's negative news out of Ukraine and Russia, 50 million comes into it. If it was in America, it'd be a $35 billion product, which is huge in size. So being a multi-billion-dollar product, it's very much fear-driven. But now it becomes, this year, Trump. It's really interesting. Trump is just so caustic in the way he talks and speaks, and it's so brutal at times. I like this. I listen to Greenland and Panama. I know what's going on with Greenland and Panama, but it's not how he discussed it. I'll share with you. But what he did discuss with Europe, that you have to carry your fair share and you have to protect your borders, was a wake-up call, and we're not going to fund you anymore. And all of a sudden, Europe has this wake-up call, and they're creating an industrial military, but they're going to start copying what's happening in America. And they don't. And what's happening in America, DARPA, the Department of Military, is DARPA's high IQ group of PhDs. They built the internet. They are the seed investors in Google. So you see that the government puts up money and they invest in all these startups in Silicon Valley because they say we need drones. Drones was invented by DARPA a long time ago because they wanted to be able to have surveillance without people getting injured. And so what I see now is that Germany's going to go to 5% of their GDP. Oh, we go from 50 billion to $250 billion on that size of a GDP. That's like dropping a massive boulder in a little pond. And so now all the military stocks and industrial base of Germany goes up. How is that confirmed to me? Purchasing Manufacturers Index is the best leading indicator of economic activity and commodity demand 6 months out. Europe, Germany was like 36, 37, below 50s, contracting. Now it's 51. It's happened. The industrial military tank builders have doubled. But a lot of the things in America have come from an ambulance drone. The idea of sending a drone into the desert, into Iraq, to save the soldier's life, now all of a sudden that's going to be used for ranches. That's going to use where an ambulance can't get through the winding roads of Ireland and Scotland, but zoom, in goes a drone, picks you up, puts you on it, and puts you to the hospital right away, and saves 3 hours of you getting care right away. So what they're doing in the U.S. is going to happen there. We see in Canada was like 50 billion, is now going to 150 billion. And a big part of that spend in those countries is going into AI and data centers, because that's the future, and other satellites, because we know that without Starlink over the Ukraine, they wouldn't be able to run $500 drones. And so what they need, but they also need data centers. Your mobile phone and this communication we're having right now doesn't work without a data center. And it work out with high intensity pipes. And that's something that Spain has much more advanced, they call dense fiber optics, to move streaming along. And AI along than Greece or Italy. So I follow all these things. The other country in Europe is Poland, and so many of the young people that are there. And then you get these old school countries like Sweden mindset of the central bank that's an anti-fintech. anti-Bitcoin as part of fintech, anti-private equity, and gaming, and they've created two great unicorns in fintech. They use the tax authorities to try to go after these new industries. So the best brains, they move. They go to Lithuania. They go to Switzerland. Bright Irish kids that speak two languages. Guess what? They learn Spanish and they learn English. And then all of a sudden they're going to get a great job working for an American company in Spain. They're going to get a job in Germany because they speak German and English. And so they're much more astute, are going to be the demographics that are going to be buying these ETFs and these thematics. And they're very smart about thematic ETFs. So when I talk about one product captures 80% of all global activity, like the arteries between the heart and the body that you have, this is one simple way of capturing global economic activity. They get it right away. And then all the kids that are now 50 million digital nomads, they get jets back and forth. They understand they're paying for those flights. And they understand the emergence of since COVID and during COVID, discount airlines came out. So some of the big ones went bankrupt with antiquated services and harsh unions. Along came new startups, and those kids, they're the honor system. They're going to be buying those tickets, go back and forth.
Yeah, absolutely. You've run US Global for many years now. What would you say is the hardest part about staying in business?
When regulations favor the big banks or big corporations, they stifle. So if a regulation comes out and for Fidelities or the Vanguards, let's think Vanguards or BlackRock, it's just another line item for a big compliance department. But for a new company that's going to go and start up, it's a big line item. So it really hurts the barriers to entry. And that's what we've seen in the crypto fintech world that was happening in America until this administration's become pro the Web3 fintech Bitcoin ecosystem with Genius Act. But you still see some of that in Norway and Sweden. And so you have to recognize that. Like I said at the beginning, I follow the G20. I look at the monetary and fiscal policies. It's a binary model. Monetary policies is interest rates and money supply. Fiscal policies, tax and spend. Where are they spending? Where are they taxing? And how are they creating economic growth and sustainability? So I think that this whole idea of coming back on thematic ETFs, I think the educated young investor, if they can learn about NFTs and the crypto ecosystem from gaming, they can definitely learn about how to make money in a theme, and they understand the macro. So when we talk about jets or trips, the same thing, it's even bigger. It's 9% of the world's GDP. Can you believe that? That one little product captures 9% of global GDP. And the airlines have something they've never had before, is they have pricing power. And now with AI, they know how to change where destinations are and the price of a ticket. So when these governments in Europe and America say, oh, inflation's only running at 4%, that's hogwash, because we know purchasing power has fallen by 50%. Well, the reason why it's fallen 50%, because inflation really is 12 to 15%. But they have a basket that's antiquated. When we look at the airline pricing and the cost of your tickets, they've doubled in 5 years. Hotels have doubled in 5 years. The Goldie Park had a zero cost, is now over 20 euros. Unless you live in that little community, it's still free for you. But you bought that ticket and you don't show up that hour, you lose, start all over again. So that world has changed. So you're seeing now cities like Venice and Barcelona are realizing they are the Disney World theme parks. They are recognizing that they can fund new roads, or repairing roads and bridges and entrances, etc., from the taxes they're imposing upon all these tourists. So I think that that's a win-win for those communities, and I think that's only going to grow. is what I feel. And I think that people psychologically after COVID in some countries are more severe than others with two-year lockdowns. Those people that went through the most severe lockdowns psychologically, they'll spend any amount of money to tour, to travel.
Mm.
And you're seeing in America, the airlines will pay for your flight ticket. You know, you deserve, Michael, a holiday in Thailand. And that ticket's only 2,000 euros. Don't worry, you can pay that over a monthly program for the next year at a cost of only 3%. Because you deserve that holiday. Do you remember what it was like to be locked down? Oh, guess what? You bought the ticket. You're off to Thailand.
Yeah.
You're seeing this new funding mechanism for the airline and the cruise lines happening. You go to see Europe, you want to go tour. Well, they've now shown up, the cruise lines, as growth stocks in tech, Investors Business Daily in America looks at high momentum and growth in revenue and earnings. Well, all of a sudden, tech stocks are being pushed away by gold stocks. And you're seeing, interesting to me, is cruise liners, because they have a tremendous pricing power because people want to go and travel.
Yeah.
Then you layer on the digital nomads. There's not enough airports. There's not enough seats for all of that. So the airlines are sitting back with pricing power.
Yeah.
And the last part of this whole equation is pilots. So where did America get its pilots from? The majority came from the U.S. Air Force. Guess what? A lot of those Air Force former pilots are now not going to be pilots. They're drone experts. They fly drones. They can drop a bomb over the Houthis in the Red Sea from a satellite or missile in the sky from Nevada. They don't know how to fly an airplane. So you have to now all of a sudden spend all this money training young pilots, and they have to have at least 2,500 hours, I believe, or some magic number before they're allowed to fly commercial, that they've flown and done landing and takeoffs. So there's a shortage of pilots. And therefore, the airlines have pricing power. They can't turn around and say, okay, we'll fly everybody everywhere and give you the cheapest tickets. No, it's structurally not there. And the last layer, especially out of Europe, was climate change, the concerns of climate change. So you had Antwerp or in Holland, all of a sudden cut back the number of flights allowed to come and leave. And therefore now the airlines just say, okay, prices are worth more. Because people want to travel. They want to be on the move. So I think it's a beautiful business. They trade at 1/3 the PE ratio of tech stocks. And all those tech analysts and all those tech coders that are digital nomads, they are all flying. So part of that whole journey is own the airlines.
We've talked a lot about innovation on this call. So when you look at the ETF industry, say 5 to 10 years from now, what do you see?
I see that there's going to be more active. I see that what we have experienced is that when you do your rebalancing, and Jets, when we create the model, was very much on a sports paradigm. I said, what global airline index can we beat based on regressional studies? So I'm looking for, are we going to be zone D offense, and are we going to have person-to-person, man-to-man offense? What are we going to do? What are going to be the weightings? And it took thousands of hours of regressional studies to beat the New York Stock Exchange Global Airline Index for 70% of the time over rolling 12-month periods for a decade. So you just don't say, hey, I got to get an idea and let's put some names together. Before we launch a product like this, we do detailed regressional analysis that you have a high batting average for that. The way the drug companies have to do before they've done beta tests before they unleash a pharmaceutical. So I think now we've seen that those particular holdings recalibrate every quarter. And that's really useful because it can outperform even the fees like we've done. But I think that you have to be actually faster when a company announces that their revenue is not as strong as the industry. They're becoming a laggard, and you can't wait 3 months to hold it before you're going to kick it out and buy it back. So what I've seen is that this past year is many more active thematic ETFs. And I think that what that will do will have a margin compression for fees, which is good for investors. It's not good for a money manager, but it's really good for investors that you can get a theme without paying 2 plus 20%. You can cap that 65, 70 basis points, and you're seeing that, and you're seeing now single individual stocks that are highly volatile. And one of the Wall Street's old-time traders was telling me that the new Viagra of Wall Street is volatility. And I said, what do you mean? He said, you sell the volatility 20 days out. You just keep selling and selling. And the more volatile it is, the better of paying a monthly dividend yield. I said, really? And he said, yeah, look at Tesla. The Tesla single purpose ETF is paid out 60% dividends. I own a Bitcoin ETF that pays out a monthly income. It's 16%. Now, it doesn't go straight up like Bitcoin, but it doesn't fall as fast as Bitcoin. Bitcoin has a 10-day volatility of plus or minus 15%. So if it runs up 15% and money comes in, they do that vol, you get that monthly income. And I know from running Hive, we went to look to do that, to try to capture that vol. But under the umbrella of an ETF and the trust of the bank and the trust in the legal system, etc., I think that that's going to grow, and it's very inexpensive. Those fees go up to maybe 100 basis points, but that's still very inexpensive because individual brokers used to do that. And Europe has a different type of option, a rolling option that they also use for these. So it's interesting for me to see that volatility is now becoming a nice asset class for earning income.
That is true. That is definitely true. All right. So to wrap up, I've got one final question for you. So clearly, you're a man who loves doing what he does. But if you weren't doing what you were doing right now, what would you do?
I'd probably be a medical doctor in poor areas of Latin America and Africa. That's what I would be doing as a professional. But in my scope as what I am, I give a lot of money for education, both poor areas wherever I'm investing, and also for the schools I went to in Canada, University for Entrepreneurship and Ethics. And so that's where I give back for scholarships for people, that young kids that are financially in need, that will make the sacrifices to maintain a B+ average. I will fund their schooling for them. So I've been doing things like that. But I think as a profession, helping people, give them that hope. I'm involved with a prayer group of retired medical doctors, and they tell me their stories of what they've done, and I live through them vicariously. Going to Haiti and going and doing in Guatemala for lip surgery and nose surgery, and giving these kids a sense of hope, a person trying, of retooling who they look like, or a cleft foot. So I feel good about that, and that's what I do.
That's fantastic. I love it. Good for you. Kudos. Frank, I could probably talk to you all day about various different things, but I'm conscious of your time. So thank you so much for being a guest. Really appreciate it. It's been you're a fountain of knowledge. So thank you.
Well, thank you for the opportunity to share my experiences.